So as I was saying, I want to complete preparation of the final account of a sole trader. So preparation of final account of sole trader. The other class we did a question for sole trader, and specifically we did a question for December 2024, which is number 4B, last sitting. Now, and I was asking you, was that the question that we did? Was that the question that we did? Last sitting, when you were class, now when you were required, I shared the video. Geoffrey, did you do that question December 2024?
Yes, December 2020.
Now question 4B.
Yes.
So we did just one question. Let us add another one so that at least we do 2 questions for sole trader, so that at least you know what it entails and the adjustments. So let us open for May 2018, question number 1. The question is still for sole trader. So you're still continuing with the sole trader accounts. So someone anatusomea as I rub the board. Okay, let me read the question. So no, hakuna mwenye amejitolea. So May 2018, question number 1. Let me show you how to read the question. So ukiambia swali uko nasoma, this is how you read it. Now, a super enterprise is a business run by a sole trader. The following balance has been extracted from the account of the business as that first March 2018. So we have the trial balance there. Unasema this is the trial balance, then you unateremuka. But add up to additional information now. Information number 1, on the 10th month, the only 10 months salary are shown in the trial balance. An equal amount is paid for the salary of each month for the year. Number 2, as at that 1st March 2018, the 2,000 has been prepaid for insurance, while list 4,100 was owing for general expense. Number 3, 46,000 has been charged to the general expense for owner's private holiday. So 46,000 has been charged in the general expense. That one we shall adjust. As at that 1st March 2018, inventory was valued at 2,000 to 5,000. A customer owing 5,400 has been declared bankrupt. This information is to be written off in full. An allowance for receivables is to be maintained at 3% of the remaining trade balances. Number 6, as at that 1st March 2018, land was revalued at 1,000. Land has not been depreciated. Depreciation is to be provided as follows. So we have cost, 4%, equipment, 25% on cost, and then motor vehicle, 40% per annum on a reducing balance. There was no addition or disposal of the current assets during the year. Required number 1, the income statement. Number 2, the statement of financial position. And number 3, you have to give the accounting concepts that were used in information 1, 2, and 3. We shall check that one. Information 1, 2, and 3. That one is okay. Now, as I said, let me remind you again, because it is important. Let me remind you again. I said that when you are doing these accounts, any information in the additional information has not been adjusted into your balance. You need to know that one. So any information in the additional information need to be adjusted twice. But the information in the trial balance has already been adjusted, But there's some items you need to know. I will show you as we continue. So where is my pens? Nimeanza kufunza na kumbe sina pens. Anyway, so if is our topic. We are still under preparation of the final account. Preparation. I think in hivyo of final account. Final account of sole trader. Ndio kama nimetoka kwa line. Preparation of the final account of the sole trader. So preparation hapo bas hapo preparation of the final account of a sole trader. So and specific, we are doing the equation for May 2018, question number 1A. May 2018, question number 1A. So May 2018, question number 1A. So May 2018, question number 1A. Now we start with let us formulate the income statement. Let us formulate the income statement. That is important. So we shall start with the income statement. So the statement of the statement of performance or the income statement. So the income we call them the income statement. We call it the income statement. So wanasema this person is called Asuba Enterprise. Asuba Enterprise. Asuba Enterprise. So we say Asuba Enterprise. So Asuba Enterprise for which period? Let me see. Now Asuba Enterprise, the income statement. Income statement for the year ended at 1st March 2018. For the year ended 31st March 2018. So the income statement ends. So the income statement ends in 2018, March 2018. So we start with the sales. So kama kawaida, mimi nitakuwa nikiadjust baadaye. So just mimi nitakuwa nikiadjustia hapa. So we start with the sales. Sales. So let us start with the sales. So from the information, what's the amount of sales? Naona ni 14,500. 14,500. Do we have sales return? Did the question add sales return? Now the question haikuwa na sales return. So nikiangalia kwa swali yetu, we don't have any information concerning sales return. Let me see if we have sales return. Do you have sales return? No information according to about sales return. So with less cost of sale. So with less cost of sale, the opening stock. So what's the opening stock from the question? Now opening stock iko kwa trial balance pale juu, kwa trial balance yetu. If you go to a trial balance pale juu, tukianza pale juu, 1st April 2017, our inventory was 242,000. So I hope you can see 242,000. We are supposed to add purchases. Now purchases iko pale juu pia, ukiangalia hapo 1673,500. 1673,500. Then you are supposed to less drawings. Do you have any drawings? There was no any drawings concerning purchases. Drawings of goods. For additional information, do you have any drawings? Now there's a drawings pale. Where is it? But that drawings, information number 3. There was a drawing, but that drawings was charged in general expense. So we shall not charge it here. So the only drawings that we charge here is the drawings on stock. We didn't have. Do we have purchase return? Do we have purchase returns?
Yes.
Purchase return. Iko ngapi? Where is it? Purchase return. Purchase return. Yes, tuko nao pale juu. Purchase return ya 6,400. So we less the purchase return. Purchases return. Yeah, 6,400. We less, I think those are the items. Hakuna drawing, so we less closing stock. There's no any other item. We're supposed to less the closing stock. Now, what's the closing stock information number? That's the additional information. Additional information number 4, 2 to 5,000. 2 to 5,000. So find the figure. So what would be the figure? So tunachukua 242,000 plus 1673,500 plus minus 6,400 minus 2 to 5,000. So we have 1630,100. 1630,100. Are you getting the same item? So mko mna confirm 1630,100. Then we less get the gross profit. So gross profit itakuwa ni 14,500 minus answer, which is 25,84. 400, 25,84. 400 tumeshamaliza hivyo. Do you have any income? So we add income. Add other income. The only income you naona kwa swali, if you go to our balance pale juu, unaona we have dividend, no, not dividend, sorry. We have discount received. Discount received. Discount received. I think that's the only income we have. Discount received ya ngapi? Discount received ni ya 42,700. 42,700. That's the only income naona, so that you can get the total income. There's no any other income. So itakuwa ni 25,84. 25,84. 400 plus 42,700. So hapa 26, 27, 100. 26, 27, 100. Now, tukishafika hapo, we can less now expenses. So less expenses. Na expenses ukitaka poa, go to additional, unaanzia na additional information. Usikuwa unaanzia kwa balance. Start with those items which is for additional information. So let's go to additional information number 1. So we have something to do with salaries. So let us do our working for salaries. Naifanyia hapa. Salaries. So let us do the working for salaries, because salaries needs an adjustment. Now, only 10 months salary is shown in the total balance. So ukikuja hapa kwa total balance, let's go to total balance. Salaries kwa total balance wanatuambia ni ngapi? 1080,000. Now, salaries ni 10 months. 10 months, sorry, not 10%. Represent for 10 months. Now, I want to ask you a question. I'm quite ready kunijibu. How much are we supposed to pay for 10 months or for how many months are we supposed to pay when we are preparing this financial statement? How much are we supposed to pay for how many months? Yes.
12 months.
For 12 months. I guess it's tumelipa for how many months? For 10. Now, is it an accrual or a prepayment? Is it an owing or a prepayment?
Oh,
We are supposed. Yes, it's an accrual. So we need to find that accrual. So accrual ya ngapi? So ya 2 months ndio tujalipa. So we are supposed to pay for 12 months. Lakini tumelipa for only 10 months. So kuna 2 month balance which is an accrual. So ngapi? So 1080,000 times 2 divided by 10. So we have an accrual. So accrual of 216,000. Now I want you to tell me, so salaries. Now, what is in the income statement is what was paid, but we need to put what was in the card. So we are supposed to add it back. So we add the 216 back. So we add back the 216,000 so that we get to know we record what was in the card and not what was paid. So we add it back. So add it. That's the working 1080,000 plus 216,000. So 1296,000. 1296. And remember this one is a liability. To be specific, current liability. Remember, this one will be a current liability. So usisahau kwenda kuipeleka huko. So kumbuke that one, that accrual also will form part of current liability. Let's go to additional information number 2. Additional information number 2 is talking about a prepayment. So we have a prepay on that 1st March 2018, 32,000 has been prepaid for insurance. So we have insurance. So insurance. And we go to let's go back to our trial balance first. So in our trial balance, insurance ilikuwa ngapi? So in our trial balance, insurance is 154,000. But there was a prepayment. So prepayment, we need to less it back. We need to less that amount. So we had a prepayment of how much? So we had a prepayment. Insurance was prepaid of 32,000. 32,000. And remember, insurance prepayment also will be prepayment ya ngapi? 32,000. These will be our current assets to form our part of our current assets. It will form part of our current assets. For now, iko sawa hivyo. So tunasema 154,000 minus 32,000. 154,000 minus 32,000. Napata 122,000. I think that is the correct amount. 122,000. The next information. Number we have also there was a general expense owing. General expense. So tunakuja hapa. General expense. So general expense, on the pale juu tuangalie general expense ilikuwa ngapi kwanza. Now general expense iko wapi? General expense, mbona sioni? Oh, nimeiona. 67,800. So we have 67,800. Now let us see the adjustment for general expense. So we have the first adjustment wanatuambia pale. There was an owing of 4,100. An owing is an accrual. Sivyo? An owing. Iko wapi? Imepotea tena. So an owing of 41. So we are supposed to add it back. So an owing we add back. So an owing 4,100. So unakuja andika hapa. We have general expense owing. Yeah, 4,100. That will become an owing. Itakuwa current liability in our statement of financial position. But for now, ndio hapo. Alafu we have also another adjustment for general expense. Another adjustment for general expense tukienda pale information number 3. 46,000 has been charged to the general expense for owners private holiday. Now there's an expense for private purpose. Now that private purpose is not supposed to be in business. So we only put items which relate to the business here. E46 wamelipa the owners on a private holiday does not relate to the business. So lazima tutoe hiyo. Ifai kuwa hapa. So we need to remove it. So itatoshea kweli. Kaje. Wacha ni rewrite again, niseme general expense. So general expense ilikuwa ngapi? Nimevuta na ilikuwa 67,800. We are supposed to add the 4,100 and then we less. Now we are supposed to less this item. Reason why are we lessing? Because it's for private ownership. It's for owners private holiday. Now when the owner anajivinjari, hiyo pesa alitoa kwa biashara. Now it will not form part of expense for the business. So that one inafaa itolewe. So itakuwa ni 67. Na ukumbuke pia hii itaenda ipungue, ilikuwa ni 46,000 yeah. Na ukumbuke pia that amount will also affect the capital account by some amount. It will affect the capital account. Wacha tutaangalia. Not capital account, drawings. This amount will also affect the drawings account. This amount, so kuna drawings ya ngapi? 46,000. So tutaitoa kwa hapa, lakini drawings ita increase our drawings. So kumbuka this amount will increase our drawings. as the end. So itakaa hivyo for now. So 67,800 plus 4,100 minus 46,000. 25,900. 25,900. We can go to another expense. Tukimaliza hapo. We have information number 7. A customer owing 5,400 was be declared bankrupt. So that's a bad debt. Bad debt. Now bad debt ni ngapi? So tuangalie pale juu kama we have any bad debt huko juu kwanza. Huko juu tuko na bad debts kwa our statement. Lazima tuangalie kwa trial balance kama tuko na any bad debt first before we make any adjustment. So bad debts. Do we have any bad debts? Bad debt, but yes, we have them. Irrecoverable bad debt 14,200. Iko juu. Irrecoverable bad debt. So 14,200. So we have the 14,200, and then we add in additional information of 5,400. 5,400. So we need to add the one in the additional information 5,400. Itakuja ngapi? So itakuwa ni 14,200 plus 5,400. So 64,200. Haya, tumeweza na bad debts. Na ukumbuke this amount has not been adjusted. So must be adjusted. So bad debt of 50. Kwa sababu iko kwa any amount in your additional information, yenye kwa kutupa additional information must be adjusted. Ndio maana naandika pale. So kama huyu, so for example kama 216 iko in additional information nimeweka pale. We need to adjust it also in there. Inapia mara mbili, inapia hapa, inapia kwa financial statement. So nilisema any item in the additional information must appear twice. Any information in the additional information, whether you like it, must appear twice. For example, stock. Closing stock iko hapa, na hii pia closing stock itapia kwa balance sheet. Haya, this amount inapia hapa, must appear also there. Ama another item hii iko hapa, itapia huko pia. This item ziko kwa additional information inapia hapa, lazima iapie kwa balance sheet. This item also iko hapa, lazima itapia kwa balance sheet. So this one must have bad debt of 5,400 must be adjusted. Must be adjusted. So hiyo tunaandika, tunaweka kando. So itakuwa adjusted kwa our data account. Tuendelee. Aya, this amount is to be written off. An allowance for a receivable must be maintained. So allowance for bad debt. Allowance for bad debt. So allowance for bad debt, we need to calculate the allowance for bad debts. Now, before we get the allowance for bad debts, okay, let us compute allowance for bad debts. Let us compute here. Allowance for bad debts. Internal balance. So first we check in the trial balance. Do you have any allowance? Do you have any allowance for bad debts in our trial balance? That's the first thing you check. Yes, we have 31,350. So 31,350. Ukienda kwa trial balance, you have an allowance for bad debt for 350. Then now you find the new one. So allowance in the additional information for bad debt. Now in the additional information, tuambia ni 3%. So this will be equal to 3% of the bad debts. Now what is the value of the trade receivables? Now trade receivables kwa pale juu ni 101, 11,01,400, 11,01,400. But remember, you need to adjust now the hapa sasa. So you need to adjust with this amount, 5,400. 5,400. Yakupea ngapi? So adjust for me that amount. Itakuwa ni 11,01,400 minus 5,400. So out adjust na hii. So tulisema any item in your control balance has already been adjusted. So don't adjust 14,200. So the bad debt of 14,200 in the control balance has already been adjusted. So amesha adjust hapa ndani. So the item that is not adjusted is the one in the control balance peke yake. So times 0.03. So 31,350. 31,350. 31,530, sorry. Now check if it's an increase. So do you check check for an increase. So you check either for an increase or a decrease. So if there's an increase, then that expense itakuja hapa. Kama there is an increase. Kama there is a decrease, itakuwa an income, itakuja hapa. Other income tutakuja uweke hapa. Decrease in allowance. Kama an increase unakuja unaweke hapa. Now, do you have an increase or a decrease? So in the table balance is that 1,350. The one in the period is that 1,350. So the difference between the two, what is the figure between the two?
0.
Now 0. So kumaanisha allowance for bad debt is 0. So there was no increase or a decrease. Aya, we continue. So tumemalizana na hiyo. Aya, the land was revalued. Hiyo inaenda kwa balance sheet. Tutaangalia kwa balance sheet baadaye. So for land, now depreciation. Depreciation, I think depreciation is our last item. Depreciation. So we have two depreciation. Tuanze na building. Building. Now tuambia building 4% on cost. Now ukienda to the word cost, ujue ni straight line basis on cost. So unaenda uko juu to balance. What's the value of the building at cost? Unaangalia kama upatie ni cost kwanza. Building. Now kama hajakupatia ni cost, jua iko in cost. So kwa total balance ukiona tu amekwambia 4% on reducing balance, ujue yenye umepatia uko juu it is on cost. So ni ngapi? Sorry, not on cost. Wanasema kuandikia on cost. Kama hii pale juu. Land, wamekuandikia land and building. Ukiangalia chini yake we have equipment. Kwa equipment wamekuandikia cost. Uko very keen. Wakati unajibu hizi maswali, you be very very keen. Land and building, wamekuandikia land and building, lakini hajakwambia on cost. Hajakwambia at cost. Imebaki hivyo. Then accumulated depreciation. Ukienda kwa ya pili, equipment wamekuandikia on cost. Check the difference. Ukienda kwa motor vehicle, wamekuandikia on cost. That's on total balance. Now you need to know this. Kama wamekuandikia any item, wamekuandikia on cost. Any item that has been written on cost, ni kumaanisha they have removed. Wametoa the accumulated depreciation. Imeshatolewa. The accumulated depreciation hapo chini yake wamesha reduce. But any item yenye haijaandikwa on cost, for example land and building, kama hajakuandikia on cost, then jua haijatolewa. So in this case, ukija calculate depreciation, you need to remove it. Lazima utoe the accumulated depreciation. So hapa ni 3,400. Na ukumbuke lazima utoe the accumulated depreciation kwa sababu hajakuandikia on cost. So what is the accumulated depreciation? It was 60,000. So lazima utoe. Hiyo na ukumbuke. But maswali ni tofauti. So utapata swali lingine wametwist. So ukumbuke at what time wametoa, at what time hawajatoa. So 0.04 times 3400 123 minus 260 minus 260,000. So mimi napata 125. Napata ngapi hii bwana? 0.04 nala. Oh, na ukumbuke
125,600.
Yes. Ngoja
125,600.
kuna kitu nimefanya makosa. This one land wanatuambia ni 4%. I think we need to analyze this again. So wanatuambia we have wamesema land and building. Now land and building, so we have land of 3.4. The 3.4. So we have so land wasema pale chini, let's go to information number 4. So this is land and building. We need the one for building alone. So land and building. Remember land is not depreciated. Let us go to information number 6 kwanza. Information number 6. As at 1st March 2018. As at 1st March 2018. Information number 6. The value of land was 1 million. So tunatoa the value of land 1 million. Now I think nilikuwa nimekosea. Ukiona tu umeandikiwa on cost, I want to remind you. So any information told on cost ni kumaanisha the amount in the trial balance pale juu already has been adjusted, wameshatoa. So ukiona on cost, ukiona to any item akwambia depreciation was on cost, then wamekupatia information in trial balance, jua imeshatolewa. So the accumulated depreciation ishatolewa. So we are not supposed to less it. So don't less depreciation here. Ukiona uko juu kwa trial balance, all the items are on cost. Kama kwa additional information wamekuambia, so in this case, additional information wametuambia that the building was on cost. So kumaanisha the items that are balance is on cost. So don't remove the accumulated depreciation. Don't remove the depreciation because we are calculating on cost. So remember, straight line basis is on cost. So venye iko huko juu inabaki hivyo. Una assume that land and building is on cost. So itabaki hivyo. So don't rest the accumulated. So 0.04 times 3.4 minus 1 million. So this one is 96,000. So 96,000. The next depreciation is for motor vehicle. Motor vehicle also on cost. So motor vehicle is also on cost 2.5 to 2.5%. So that one is already on equipment on cost to 20. So remember, this one is on cost. We calculate items on ukitumia the straight line basis, you calculate the depreciation on cost. So hizo zote ziko on cost. So ukiambia pale chini that the depreciation is on cost, una assume the amount in the trial balance are already on cost. So ni direct. So 2.5 over 100 times to 20,000. 5 to 20? No, not 2.5, ni 25%. Me asema 2.5 waji. It's supposed to be 25% times to 20,000. 55,000. The last depreciation. Allah, mimi nimefanya nini? This is supposed to be equipment. Mwadhani. This is supposed to be equipment, 25%. Equipment ndio 25%. Na huko je equipment ni ngapi? Sawa, to 20,000 iko sawa. Then ya mwisho ni motor vehicle. Motor vehicle. Now motor vehicle wametuambia now motor vehicle Now motor vehicle ni 40% on reducing balance. Now kumaanisha we need to remove our accumulated depreciation. Because on reducing balance ni kumaanisha we need to remove the accumulated depreciation. So motor vehicle ni 40% off. Now this one you need to remove the accumulated depreciation to 60,000. On reducing balance, come on, on cost, you need to remove the accumulated depreciation. 132,500. 132,500. That's the difference now. So what are the difference when you talk here? So ukipatia on cost unachukua 40% of the cost direct. Ukipatia on reducing balance unachukua 40% of that amount of cost less the accumulated depreciation, or what we call the provincial. Another name for accumulated depreciation is the provincial for depreciation. So kumbuke hiyo. So 260,000 minus 132,500 times 0.4. 51,000. 51,000. So I think tumemaliza all the item in the additional information. So let's go back to our trial balance. We check if we have any other expenses. So tuanze huko juu. So capital hapana, inventory hapana, purchase hapana, electricity expense. So electricity expense, did you do electricity expense? Tulifanya ini hatukufanya. So electricity ni ngapi? 22,300. 22,300. Kama nimetoka kwa laini, niko karibu kufika mwisho. I think hapo inaone. Hapo iko aje? 22,300. Tuangalie kama tuko na nyingine. Discount received ni income, purchase discount allowed 24,200. Discount allowed 24,200. Discount allowed. Discount allowed ni ngapi? 24,200. 24,200. 24,200. Motor vehicle running expense, that's another one. Motor vehicle running expense. Motor vehicle running expense. Hiyo ni ngapi? Motor vehicle running 15,800. 15,800. Haya, space yetu naona inaisha. I think I will have to hapo. Haya, kutoka motor vehicle running expense. Haya, drawings hiyo tutaadjust na ile drawings nyingine yetu kwa balance sheet. Tunaachana na bank balance. Salaries tumeweka, insurance tumeweka, trade receivables tumeweka, allowance, traders. We have a loan. We have loan here, 9%. So interest is 9%. So we need to adjust that one. Now loan, interest on loan unpaid. Now 120, interest on loan unpaid. So interest on loan. On loan, ni ngapi? 120,000. Interest on loan, 120. Nilikuwa nimepotea ama?
Ulikuwa umeenda kabisa.
Kama muda kiasi gani? Muda kiasi gani?
3 minutes hapo hivyo.
Oh, poleni. So nilipotelea wapi?
Hapo tu kwa
Interest on
interest.
loan.
Oh, kwa interest on loan. Aya, sawa sawa. So do you have any other information which affects the loan? The loan amount? I think in hiyo tu hakuna information. Let me check. Let me check if you have any other information concerning that loan. I think hakuna. So 120,000. So find the net profit. So find the net profit afu niambie the figure. Calculate the net profit tafadhali. Net profit. Now, before you calculate this, let us do this. Now, anatuambia pale interest on loan pale juu. Interest on loan, interest on loan paid is 120. Ukiangalia hapo anatuambia interest on loan paid is 120. Interest on loan paid is 120. Hiyo inamaanishaje? Hiyo inamaanishaje? So we need a working for that one. So tunasema hivi interest on loan. Interest on loan. We need to do a working for this one. So 9% The loan is supposed to be 9% of the total loan. Total loan kwa swali ni 1,500. It is 1,500. So 0.09 0.09 times 1,500. How might it affect this amount of interest on loan? Is it in the additional information? Is it this item? Is it in additional information?
No.
So kama iko kwa additional information, acha tuachane nayo. I think it will not affect. So let us find the net profit ikiwa hivyo. That item itabaki tu hivyo. Acha tuone isipo balance tutajua where the problem is. Now find the net profit ni ngapi? Na mbona ume minus vizuri. Unapata ngapi?
$758,500.
Hey. Mimi napata 734 700. Wengine unapata aje? Mimi hapa 734 700. 26 27 100. 26 27 100 minus 1296 1,000 122,000 25,900 64,200 96,000 55,000 51,000 kama ni correct. I hope ni correct those amount nimeweka hapo. 22,300 24,200 15,800 120 supposed to be 120,000. Pale juu ni ngapi? Interest on loan iko wapi? Yes, 120,000. So 734 700. 734 700. Are you getting the same?
Uko sawa?
Iko sawa? Yeah. So that is okay. Hiyo iko sawa kabisa. So now I think we can move on. So but kama kuna mahali tumekosea umjue, it will not balance. So
Excuse kidogo, I think hapo kwa bad debts inafaa kwa 64,600.
64
600.
600. Okay, adjust tuko. Tuambie figure. Mapana ngapi? 734 300. 734 300. 734 300. Nataka ni confirm na zenyu actually.
Yani nimepata 734 300.
I think sasa iko sawa. So let's do our working for balance sheet. So tutasema Asuba Enterprise enterprise, statement of financial position, of financial position as at, I hope it show up as at that 1st March 2018. So tuanze na land. So land was revalued at how much? Tukienda pale kwa information yetu wanasema land ama tuseme land and building. Ziko tu zote mara mbili. Land and building. Land and building ni 3.4. Land and building 3.4. I was supposed to less our accumulated. So up on a less accumulated depreciation because this one is on cost. Remember, we need to less our accumulated depreciation and our division for the year. So division for the year in the year upon 96,000. So we less the division for the year 96,000. And we also less the accumulated depreciation. So accumulated depreciation for land in Ngapi to 60,000. To 60,000. So how much? Inakuja ngapi? So
Si land
yes.
Land iko na depreciation.
So land haina depreciation lakini kwa hapo kwa land or hiyo 1000 iko ndani. So haina effect hata ukiweka kando kando. So hiyo 3.4 million sisi tuna account for the 3.4 peke yake. So kumbuke hii depreciation hii 96,000. Tulitoa 1 million ya land. Lakini tukiweka hapa tunaweka both land and building. So 3.4 yenyewe iko yote full. This amount 34 ikiwa na 1 million ndani. And then tunatoa sasa depreciation ya the building alone. So the building alone tunajua depreciation 96 na 260. Tuko sawa? Iko sawa? So inakuwa 44,000. So land iko ndani lakini hatutoi depreciation ya land. Land inabaki venye ilikuwa. So land will remain the way it was. So tukimaliza land tunaenda number 2, equipment. Tunajaribu kusqueeze ndio itoshe. Equipment. Now equipment. So in exam utakuandika na current assets na assets kando kando. So for me because of space so nitaziweka zote mara moja. But in an exam start with the non-current assets, for example land, equipment, those are non-current assets. So the cost was to 20,000. We are supposed to less depreciation for the year 55,000. Then the accumulated depreciation kwa swali ya equipment. Ya equipment ilikuwa ngapi? 103,000. 103,000. Inakuwa ni 220,000 minus 55,000 minus 103,000. So that one is 62,000. This one is 62,000. We have any other non-current asset? We have motor vehicle. Motor vehicle. Motor vehicle. The cost for motor vehicle was to 60,000. To 60,000. You are supposed to less division for the year. For motor vehicle was 51,000. Then our accumulated depreciation for motor vehicle, the 132,500. 132,500. So to 60,000 minus 135, 132,500 minus 51,000. So 76,500. 76,500. We go to non-current. So isn't non-current? So we go to current. So in an exam, you start with the non-current assets. So for example, this one are the non-current assets. There you have. Then you weke hapo kidogo. This one are the non-current assets. Unaandika vizuri. So make your space naandika hivyo. Then kumaliza unaenda kwa current assets. Current assets we have inventory. inventory. Now inventory ndio hii hapa, closing inventory 2 to 5,000, 2 to 5,000 inventory. Aya, muniambie we have trade receivables. Trade receivables. Trade receivables in our trial balance. If you go to our trial balance, pale juu our trade receivables ni 11,01,400. 11,01,400. We need to rest on any item which affect this account in your additional information. The first one, it was 5,400. 5,400. And another one was allowance for bad debts. The one was that was an additional information was 31,350. The one that was in additional information was 31,350. So 11,01,400 minus 5,400 minus 31,350. That one will reduce that account. Inakuwa ni 101,9,650. Tukimaliza hiyo receivables, we need to check the bank. We have bank also for our trial balance. What's the value of bank in our trial balance? Bank was not affected in any manner. So bank balance itabaki hivyo. Let me see. Bank balance. No, bank balance was affected actually. So we need to adjust for bank balance. So how do we adjust the bank balance? Bank. So let's go to additional information. Tuone kama kuna any amount. Actually, there was no any amount which affects. So it need 245,110. 245,110. So the bank balance was not affected. So itabaki hivyo 245,110. Then tulikuwa na one item. Tulisema hapa current asset. This one lazima tuweke. You said it's a current asset. So to mark hiyo insurance prepayment. Insurance prepayment of how much? 32,000. So add to get the total assets. Total assets. The total assets. So add to get the total assets. So tunasema ni 30,44,000 plus 62,000 plus 76,500 plus 225,000. Imekula space plus 10,19,650 245 110 32,000. So napata 47,04 to 60. Napata 47. Atunapata ngapi? 44,000, 62,000, 76,500, 2 to 5,000. But yeah, this amount, just see this amount. Niambia kama inaleta hiyo 30. That this is supposed to be 31,530. 31,530. This one is supposed to be 31,530 actually. So that the final figure itakuwa ni 47,04,800. 47,04,800. I think that is the correct amount. I think that one is the correct amount. So adjust hiyo itakuwa ni 11,01,400 minus 5,400 minus 31,350. Itakuwa ni 10,19,650. 31? Not 350. 530, sorry. 10,19,470. Supposed to be 10,19,470. That one is okay. Now add. Then tukishamaliza hiyo, we do capital and liability. So tuanze na capital. Capital. So capital ni ngapi kwa swali? If you go to our trial balance huko juu, our capital is 1852. 800. 1852, 800. Can you see that one? 1852. Mtu nimeona ametype hapa. Let me see. So anasema on board vizuri. Is everyone having that kind of a problem? Wengine mko na hiyo problem pia? Yes. Tuongee tukisonga.
Iko sawa.
Mimi niko sawa.
Ni sawa sawa. Let us do capital. So capital kwa swali ni ngapi kwa juu? 1852 800. 1852 800. Now you need to adjust with the drawings. So we are supposed to less this amount, which will affect this account. The first one is drawings. So we less drawings. Now drawings ilikuwa mbili. One is the income statement. Tunaenda kwa income statement. Tuangalie drawings. 320,000. 320,000. Then we had another drawing in our additional information. The one which affected the general expense. This one will increase the drawings account. So drawings it increase. So there's a drawings in your chukwa. Treat them as drawings. So 320,000 plus 46,000. So this one is supposed to reduce our capital account. So less. There is 66,000. So that one is supposed to less it. Aya, tukishamaliza kwa drawings, we have our net profit here. That is supposed to increase our capital. Net profit. Our net profit of 734,300 is supposed to increase our capital. So we add it back. 734,300. Aya, tumemaliza na drawings, capital, drawings. Which other item will affect the capital account apart from the drawings and the net profit? Hakuna. So tuende kwa long term loan. So non-current liability. Non-current liabilities. Na ni moja tu, so nitaandika hapa 9% loan. 9% loan ilikuwa ya ngapi? I think ilikuwa ya ilikuwa 15. 1.5. Then current liabilities. So current liabilities, we have the payables. So payables kwa swali yetu trade payables iko pale juu 762,880. 762,880. 762,880. And then tulikuwa na another item here. Tuko na huyu salary, accrual salaries. Tuweke hapa. Accrual salaries. Ama salaries owings. Ilikuwa ya 216,000. 216,000. Then you have the general owings hapa pia. General owings ya 4,100. General owings 4,100. Do you have any other owing? There is no any other owing. Now the question is it balancing? Now that's the question now we should ask ourselves. So total capital and liabilities. Now the question is, now is it balancing? So 1852 800 minus 366,000. Yeah, plus 734. 734, 300 plus 1500 plus 762, 880, 216,000, 4100. Inakuja ngapi? Yes. How much is it? Payables kwani ni ngapi huko? Payables huko juu ni 764. 764. Mnapata ngapi? Is it balancing? Yes. So 1852, 800 less this 66,000. We had 734, 300. We had 1500. We had 762, 880. We add 216,000. We had 4100. Is there any item tuna miss? Is there any item we are missing? We amunijibu bwana.
Ya balance. Ya balance.
Ina balance. Na mbona mimi yangu ibalance ama mimi ndo naandika vibaya? Mimi ndo na ama mimi ndo naandika vibaya. Vile mi had 10, 19 for 70. 245 for 110.
Wewe ndio unaadi vibaya.
Oh, hii ajui inafaa ikuwe ni 4704 0800 sivyo? 080. Inafaa ikuwe hivyo. Is that one correct? 4704 080.
Yes.
So hivyo iko sawa. Now remember the important thing to do when you're doing the taxation of sole trader, the important thing you need to remember is to do the adjustments of the accruals, the adjustments of owings, the adjustments of depreciation, and the adjustments of allowance for bad debt and drawings. Then another thing you need to remember is any item in the additional information should appear twice. You need to do the adjustment twice. Any item in the additional information should appear twice. One in the income statement, so it should have a double entry. In short, it should have a double entry. So if you don't remember that, then your question will never ever balance. Are we okay? Are we fine? So that's all about the taxation of the sole trader. I think we can introduce taxation of partnership. Ama tufanye kesho. Mu consume this one. So that one is fine. I think that one is now is okay. So now what we should think about is now taxation of partnership. So minimum either to sole trader. Any question? Brenda, do you have any question for true sole trader?
No.
Nani mwingine? Let me see. Let me nione watu wale wajaongea for a long time. guys, unfortunately, yangu imeenda off. I think we shall continue tomorrow. I was asking, nilikuwa nauliza nani? Lorin, are you conversant now with the adjustment for sole trader when it comes to the preparation of the final account? Lorin? Lorin is not there. So I think Lorin is not there. What about Linda? Linda? Okay, Linda is also not there. Linda is not there. Ledisha?
Sina swali.
Ledisha amesema ana swali. Okay, that one is all. Now, go and practice more questions. Nilikuwa nimewapatia swali. So for now I cannot share the screen kwa sababu the camera imezima. So sikuwa nimeweka kwa charging actually. Anyway, that's all about it. So I think we shall continue with the same tomorrow. So tomorrow we shall find time. So mtaniambia in the group. Make sure in the group you mention the time you have a class so that tujue saa ngapi. So with all that marks the end of our class for preparation of the final account of sole trader. So we shall start tomorrow preparation of the final account of a partnership account. So that will be our topic, preparation of the final account of the partnership. That will be our new topic from tomorrow. So have a good night. We meet tomorrow.